What's up, YouTube? It's Todd Horst here with AC Tracker. Just wanted to give a quick update, not because I really did any trades, but just because I was thinking about my account today. So we'll just do a quick overview right now. Currently, I'm sitting at around 1,600. The $54 here is for the Microsoft position, and that's actually down a bit because it was down today. This is some of the errors with the brokers where after close they sort of get all weird, but anyway, this is my account overall, excluding the SPY positions, which make the chart look pointless. So for next month we have Costco. That's been hanging around this point, maybe 15% profitability because of earnings. I'm guessing the IV is still elevated, and hopefully after earnings that will go down. Again, you can watch my previous videos, but I've talked about before how to go into Thinkorswim and look at the expected move for earnings. I think we'll still be fine with that because I need it to stay above 290, and currently it's trading about 305. So hopefully after earnings with the IV crush, I'll be able to close out that position. For the expiration after that, I have Apple and Microsoft. You can see the combined is a little bit iffy, but that's all because of Microsoft. Apple is right on the cusp of being profitable. Microsoft has a little bit of room to work. Again, that's because they're down today. I need it to be 190 or above to get full value out of that, and right now it's trading at 181.5. And then of course LRCX, that one's not till September, but it's coming along very nicely. So the main thing I was thinking about today was sort of trusting your instincts and to not look back. I closed the AMGN position last week and opened up the Microsoft position, and of course the Microsoft position is down, like I said. And so if you've never done this, you can come into activity here, go to filled, and then click on a previous position that you had closed out. Again, you can see that it's closed right here as opposed to open. This was a debit to close, which means I sold it to open. I got a credit to open it and debit to close. If I hit duplicate order here, it'll show 218. That's what I actually closed it for. And if I uncheck that, now it'll say 118. This is the price that it's currently trading at. So had I not held on to it, my account would be up another $100 because it would have taken me $100 less to close this position. If we go over to the AMGN chart, it's been basically down since I closed it. And you can never really predict the future, obviously. And I was anticipating that AMGN would go on its cycle that it typically does. Not that it stays in the same cycle, but it is a very cyclical kind of stock where it will go up and down, and you'll be able to do a put spread and then turn around and do a call spread on it pretty frequently. I've done that before. So yeah, I was anticipating it turning around, but it was a bearish position, and I was expecting a leg up in the market, which we did get today, and I was losing faith in this bearish position, so I closed the position. Obviously, hindsight being 2020, I know now that I could have kept that open and closed it for a 50% profit today. As it was, I closed for a $20 loss, and I could have closed for whatever, $50, $60 gain. That would have been nice. But ultimately, I don't really think you should look back, especially when you're first starting to trade. I think that's when you're most inclined to is when you first start trading. You'll open a position and then be unsure when to close it because you don't have a trading plan. You should always have a planned exit in mind. And then even after you close it, maybe you waffled a bit on whether you wanted to close it or not, then you finally do close it, and then you continually go back and check to see if that was the right decision. And ironically, I think that you should probably get some experience under your belt before you start looking back. After you do have that experience, it's good to look back to refine your process. Maybe you are holding on a little bit too long, or maybe you're closing them out a little too early. So fine-tuning your process is good after you've gained some experience. Obviously, if every position you close is a loser, maybe you consider doing the opposite of how you're trading in order to be profitable. But with options, that's not necessarily even always a sure bet. But I guess what made me think about this is, even though in this case the AMGN position could have been held on and been profitable for me, 9 times out of 10 my instincts are correct. And again, I only lost $20 on that position. It's obviously I would have rather gained, but that 1 time out of 10 I'm expecting to make the wrong decision of myself. But for the majority of the time I make a decision and it goes the way I want. And sometimes it's not even immediate. For the expiration this month, I had a position in keys in another account. I closed it for a loss on Wednesday of the expiration week for $100. So I lost $100. Then on Thursday, I could have closed it out for a scratch or close to $50. I'm not sure, again, if that would have filled or not, but it could have filled 20, 50 bucks profit, which would have been great. But I know myself, and on Thursday, if the stock's moving my way, I'm more inclined to, hold on for it for one more day to try to get full profit or very, very close. Well, wouldn't you know, then on Friday, the stock reversed, and I would have had a full loss on Friday. So that would have been, like a $350 loss. Instead, I had the $100 loss, which I'm much more happy taking that loss than taking the full loss. So this is an example. The keys example is one where I trusted my instinct, and I think it turned out the right way because odds are you're not going to be able to time it correctly. So Thursday, maybe it wouldn't have filled. Maybe I would have closed it in the morning or in the afternoon, and those wouldn't have been as advantageous as it was. I just know I looked at it one point on Thursday, and it was at a $50 around that range profit. So, if you don't trust yourself and believe in your trades, then that's really all you have. You can't follow somebody else tit for tat and try to be successful. You can do that a little bit to learn how people go about their trades, and it's definitely good to get started. But at a certain point, you need to fly on your own, and so yeah. 9 times out of 10, my instincts are right, and I think you're probably the same way. You just need to trust yourself and do what you feel is most logical. I hinted on it a little bit, but we did get a leg up today. From my perspective, before I was saying we would hang in the 260, 280 range for a bit, and we did hang there for a couple weeks. Now I think we're above that, and we're going to be hanging in the 290, 315 range. Obviously, who knows what's going to happen. That's just my opinion. Last thing I really wanted to talk about here was alerts. I publish all my trades on the alerts. So today I opened up 3 positions, and I closed shop. And then I opened up one, what was that, last Friday? 22, yeah, last Friday. So anyway, I have all my positions here on the alerts. They also go out in emails. So you can see all of those, whether it's for my small account or other accounts, under the leads alerts section. If you're not a member, it doesn't take any credit card to sign up. You can go ahead and sign up. You get 30 days for free with no credit card again. And after that, it'll just expire. So you don't ever need to put your credit card in. But if you're interested in getting seeing all of my trades, you can do it that way. Otherwise, there's not much action on the small account. Every dollar is basically a battle, and we're inching up to 2,000 again. Once I get to 2,000, I'll announce again that I'm doing the 2 to 10K challenge, even though we had gotten as low as 700, I think. But anyway, that's about it for today. Let me know if you have any questions. Thanks, guys.